All right, I believe we are live. Hi, everybody. Welcome to today's. Okay, baby. Welcome to today's FinCrime Friday chat. My name is Clayton Norman. I'm going to be your host today. We are here for a great discussion about cryptocurrency and financial crime. This is our March edition of our FinCrime Friday chats, brought to you by ACFCS. We've got some incredible experts today. I know you know them and love them already, but I'm gonna kick it over to Aaron and Brian to introduce themselves real quick, and then we will go ahead and get started. Brian, you wanna go first?
Sure thing, if I can find the unmute button. Hey, everybody. I'm Brian Zabeta-Gindel with ACFCS. Thrilled to be joining you again for this FinCrime Friday chat. There is so much to talk about in the crypto space, tons of evolution, tons of criminality, and look forward to hearing your perspective, especially. I know we have a large group gathered, so we have a lot to say, but I'm sure you have a lot to say too, and I'm going to be asking you to chime in on a couple of these topics. So look forward to joining the conversation.
Aaron?
Hey there, everybody. Erin O'Loughlin, Senior Director of Training for the Association. Thanks so much for being here. And Clayton, I honestly hate that term expert because I feel like you reach your end of the rainbow and you're an expert, you know everything. And I know for a fact, I don't know everything. That's for sure. I'm constantly learning. That's why I like the training position. And I appreciate you saying expert. I like that. I think it helps the ego because of the fraud syndrome that I have constantly, the imposter syndrome, that's the word. But we're constantly learning, and that's why I'm here. I love to read these headlines and stay on top of things because there's so many other things I just don't know about our industry. But thank you.
That's right. Well, we're all here to learn, and you're back after a brief hiatus from missing out on our last FinCrime chat. So we are super happy to have you here. And exactly right there, Eddie. Thank you. If you're tuning in, we love hearing where everybody is from. So please drop a comment and let us know where you're watching from. It's incredible to see all of the countries and cities across the globe where financial crime and compliance professionals are tuning in and joining us today. You see a Washington in the US. Is that DC or state? Let us know in the comments. Also, throughout our discussion today, we've got some news headlines we're going to go through. We've got a great discussion about cryptocurrencies and financial crime. Please ask us questions, share your comments. We would love to hear what you are interested in, what you're seeing out there in your careers and in the work that you're doing. And we would love to hear from you. So yeah, keep them coming. Oh, man, this is great. Fiji, Mexico, Suffolk, Virginia, Jason from Long Island, Summer from DC. This is awesome. We love seeing you guys. Thank you all so much for being here. Also, a reminder, if you're not a ACFCS member today is a great time to go ahead and become a member. You get access to hundreds of hours of training, exclusive events, in-person events, virtual events, networking events. It's really an incredible resource. If you want to take your financial crime and compliance career to the next level, head over to acfcs.org today and become a member. If you're already a member, man, we appreciate you. We love that you're here. We want to hear your thoughts. We want to hear your insights. We want to hear your feedback on this discussion. We want to hear your feedback on our Future of FinCrime Skills Symposium that we had 2 weeks ago, earlier this month in March. I believe that was 2 weeks ago, because that was a great event. And we had, lots of incredible experts sharing really, really great knowledge and insights, and would love to hear the insights and learnings that you took from that as well. Seeing even more people. Wow, this is incredible. We had over 250 people registered for this conversation today, which is enormous for us. This is huge. Christina from NYC, love it. Kay from Kansas, Rushda from India. This is awesome. So again, acfcs.org for all your financial crime and compliance training needs and accelerating your career. Go over there and join us and keep chiming in. Here we go. Let's jump into our news stories and headlines today. So the first one that we have up headline is U.S. authorities collaborate with Germany and Finland to disrupt Garantex cryptocurrency exchange. On March 7th, 2025, U.S. officials, in partnership with German and Finnish authorities, dismantled the online infrastructure of Garantex, a Russian cryptocurrency exchange accused of facilitating money laundering for transnational criminal organizations, including terrorist groups. The action underscores international efforts to combat illicit financial activities in the crypto space. Brian, where we come down on this?
Yeah, this is a pretty cool one. I mean, I think those in the crypto space are probably familiar with the name Garantex. It's a pretty notorious exchange that's been operating, according to the DOJ, since 2019, processed 96 billion worth of crypto transactions. That's billion with a B. So we're talking major financial flows. Now, arguably, not all of that was illicit, right? I'm sure there were just some regular folks trying to buy and sell crypto on Garantex, but it was very well known as a exchange of choice for particularly like ransomware attacks, certain cybercrime activity, Russian affiliated cyber fraud and scams. And so to see it get taken down is pretty cool. The way they did it was also cool. You know, we saw this a lot in the darknet market context where they worked against the infrastructure that hosted the exchange. They also indicted some individuals behind it who may or may not ever be extradited, Russian nationals and a Lithuanian national who I believe are both in Russia. We'll see if they slip up and decide to travel to France or one of the other vacation destinations where these guys tend to get picked up. But for the time being, what was really cool was to see the way that in this internationally coordinated effort, they worked against the technical infrastructure. They got, they seized the servers hosting the Garantex operations. They got a seizure order on the website domains. There were 3 of them that Garantex was using, and they brought it down that way. So even though, these folks are operating in jurisdictions that are, not friendly to law enforcement, have a certain degree of impunity, if you can get at the infrastructure, you can still disrupt the operations. Also cool to see this, in the context of kind of the wider, we'll talk about the wider kind of shift in crypto and some uncertainty of like, okay, where's the industry headed? Bringing down Garantex is like a really good, indicator that AML, fraud, sanctions compliance is still going to be of vital importance for crypto, and there will be robust enforcement actions taken against, these jurisdictional arbitrage exchanges that try to operate in the shadows.
All right. That's a great one to kick us off with. Up next, OCC clarifies bank authority to engage in certain cryptocurrency activities. So also from March 7th, the Office of the Comptroller of the Currency issued an interpretive letter 1183 reaffirming that national banks and federal savings associations are permitted to engage in a range of cryptocurrency activities. The guidance aims to provide clarity and support for banking innovation within the regulatory framework. Aaron, you going to take this one?
Yeah, thanks, Clayton. This one was so exciting to me because I'm a nerd. I say exciting in these kinds of terms because having been inside FIs, large FIs, the constant term was, oh, it's too risky. Crypto's too risky. You have to recommend account closure, close it down, close it down, close it down, right? And that's what I thought too when I was first doing it, because I didn't know what I was looking at. And I see the ACH transactions going in and coming out. What the heck is this .com thing they're purchasing? They weren't purchasing, it was crypto. And that led into an entire Pandora's box of, what do we do from FIs? And I say, what do we do in that kind of voice? Because I was the same way. I actually felt that way. And I had that voice in my head. Now this letter says you can bank crypto, you can engage in certain crypto activities. It's absolutely fine. We're not going to hurt you. We're not going to come down on you. You can provide custody services for digital assets. You can, as long as it's consistent with existing banking laws and the risk management frameworks. And that's kind of what my boss at B of A at the time, when he and I were saying, if it just is within the realm of our risk appetite policy statement, why couldn't it just be okay? Well, they didn't have a risk appetite policy statement at the time, way back in the day. This one also, the letter also says that banks are expected to establish robust internal controls. Duh. That's what we have to do anyways for anything. And as long as you have regulatory consistency, board and senior management oversight, and audits, regular audits, you're going to be fine, and you're going to be allowed to move into this space that was on the men's to go ahead and do anyway. But this letter actually shows and gives you guidance to do that. I'm excited about it.
Awesome. Very cool. Hey, and while you were talking, we had a great comment from, I can't tell who the user is. I just see LinkedIn user, but apparently it looks like one of the Lithuanians involved in the Garantex exchange, just like you said, at one of the holiday vacation destinations, was arrested maybe 2 weeks ago in India. There's a link there in the comments if everybody else wants to check that out. So thank you for sharing that.
It's amazing. Like, thank you. That was a great catch. But I've just pulled up the article when I saw it in the chat, and it says this guy was apprehended while vacationing on the coast of India with his family. Like, I've never been a notorious Russian cyber criminal, but
Yeah.
I would just probably vacation in Russia. But these guys always go somewhere and get picked up by law enforcement. It's awesome. I mean, keep it up, guys. Don't
Right.
ever stop going on vacation out of the country, please.
If it was me, it'd probably be picked up in Branson, Missouri. So we've got somebody from Columbus, Mehul from Columbus, and Kelly from Phoenix. Also, guys, thank you for joining us. Next one, North Korea. So North Korean hackers cash out hundreds of millions from the 1.5 billion Bybit hack. Back in February, North Korean affiliated Lazarus Group executed a sophisticated cyber attack on the cryptocurrency exchange Bybit, resulting in the theft of approximately $1.5 billion worth of Ethereum. Despite ongoing international efforts to trace and recover the stolen funds, the hackers have successfully laundered at least 300 million, likely channeling these assets into the North Korean military and nuclear programs. Whoa. Brian, what do you think?
Yeah, this is the story of the year, the decade in the crypto space, right? And we talked about it. I think can't remember if we talked about it last time. I think we did. Yeah, because it had just kind of broke, and since then, it just continues to evolve in a fascinating way. I think they've been able to cash out something like, I've seen estimates of 300 million, 400 million. It's a good haul for North Korea, right? It's a good dishonest day's work for the Lazarus Group. And again, I mean, like the level of sophistication that they've displayed here, they've applied some of their kind of trademark money laundering tactics that they've developed over the years. They've been doing this for a long time, right? But they continue to move really fast. They've adopted a lot of cross-chain swaps. They're using decentralized exchanges, decentralized protocols extensively. The flip side of it, we might touch on this again later, but the flip side of it is that the industry response has also been really cool to see. And by and large, like the blockchain analytics groups in partnership with law enforcement and others have generally been able to, keep up with it. Like, they're following these flows, they're understanding where it's going. Doesn't mean they can stop it. Some of it, at least, has been flowing through a specific exchange, EXCH. I don't know how you say that. But that like has like a personal beef with the Bybit founders, and as a result, they were like allowing a bunch of money to run through. Anyway, it's just been interesting how some of the classic techniques exploited by North Korean launderers to move funds in all sorts of hacks and heists that they've been conducting since like 2018 at least have been supercharged as the space evolves, as DeFi protocols have matured and allow for the even faster transmitting of funds and movement between different chains. But also it's been cool to see, again, like I said, that industry response and the ability to follow it. You can't you can't stop it though, and that's been one of the things that's, I think, most painfully shown by the Bybit hack, is that we still have a ways to go in cybersecurity in the space. Even a major exchange, Bybit was one of the largest exchanges in the world, and they were still vulnerable. So cybersecurity still needs increased robustness. And once you get hacked, there's still the ability to find liquidity, find exchanges that will move it, and find those holes in the system to, extract hundreds of millions, maybe eventually billions in assets from this heist.
Nice. And while you were answering, we had a great question come in from Abdul. So I think we should go ahead and just take this one before we move on. So guys, how do you see the risk of crypto in terms of supporting terror finance? And do you see current regulations as being enough?
I can go ahead and take this one. Thanks so much for that question, because terrorist financing, I did a lot of counterterrorism work when I was overseas and going after the Al-Qaeda matrix itself. And I will say that no matter what the platform is, terrorists, drug traffickers, human traffickers, fraudsters, launderers, drug kingpins, you name it, anyone who wants to do anything illicit, terrorist financing being at the top, they do love their anonymity / pseudonymity. So the nice thing with crypto is that it's on the blockchain forever. So they make a transaction, it can be followed. So my good friend Pamela Clegg, she was with CipherTrace for years, and she's always said, and I agree with her because I was at Coinbase for a year, as well as being inside at FI. I would rather trace a crypto transaction and crypto transactions over the dollar. When you're in an FI, you lose track, transparency outside. It goes from Bank of America, go to JP Morgan. Yes, I can fill out a 314B and ask. That takes weeks to get an answer a lot of times. But when you're inside of, say, a currency exchange, a cryptocurrency exchange, you can just pull up your tools, your blockchain analytics tools, and watch it go outside of your exchange and then watch it go somewhere else. So yes, there is anonymity, but it's pseudo. So it's pseudo-anonymous. And they do like that. So they can make these global transactions within minutes, whereas say with the Swift campaign, with the Swift ability to have wires, that takes days. But they really like any type of fast peer-to-peer transactions, and that will continue to happen. But at the same time, they are also learning that we're able to track that too. So they're seeing a double-edged sword in this technology. You're getting the movement going fast and you're getting the money where it needs to go, but it's a lot easier to pull back from. Now, they are using things such as the mixing services, privacy coins, that sort of thing. They're going to continue to try to hide inside this technology, just like they continue to hide inside the dollar. And as soon as we clear up money laundering within fiat currency, which I'm sure we will, right, Brian? We will absolutely soon clear up all money laundering in fiat currency. Then that means we can clear up all money laundering and problems in drug trafficking, terror financing within cryptocurrency as well. Now, the second part of that question he asked was, are current regulations enough? They're a lot more than what they used to be. So I will say we're on a good trajectory to firming it up. I'm not too sure how much more that can happen because you're going into privacy concerns, and that's way above my pay grade. So I would not know how to make more regulations, but I think there's a lot of room to tweak what we have right now.
And actually, Ravi just weighed in with this, echoing what Aaron just said, that about the trajectory. Many jurisdictions are in the phase of enacting regulations, the likes of UAE, UK, USA, Singapore at the forefront, potentially other countries. So great point, Ravi. Thank you very much for that. That's absolutely true. Seems like things are at least moving in a good direction in terms of those regulations. All right, next headline we're going to jump to. Hopefully I pronounced this correctly. Wayone, the company behind the largest ever illicit online marketplace, has launched a stablecoin. Wayone Guarantee, a Telegram-based marketplace in Southeast Asia, linked to over $24 billion in transactions related to online fraud, including pig butchering scams. Despite the rebranding efforts of the company and policy changes, the platform continues to thrive, recently expanding into cryptocurrency services, including launching its own stablecoin. Brian?
Yeah, this is an interesting one. And you said like the key word that will come up over and over again during this session, stablecoin, right? If we had done this 2 years ago, we'd be talking about, or 3 years ago, whatever, we'd be talking about Bitcoin. I don't think we've mentioned Bitcoin once yet on this conversation. We've been talking about stablecoins here and, other crypto assets as well. And that's really been an interesting evolution in like the illicit finance space. still using Bitcoin, still using, Ethereum. I mean, the Bybit hack was Ethereum, that type of thing. And there's different use cases for all of these, but a lot of the illicit activity, whether it's sanctions evasion or money laundering or terrorist financing, even, Hamas was doing a crowdfunding campaign through Tether where they were taking USDT. It's stablecoin related activity. And same thing on the regulatory side, to kind of go back to are the regulations enough question. A lot of the regulatory focus recently that's either been finalized, is in the process of being finalized, or in the US is sort of like nascent, is focused on stable coins. And to make a bold and probably stupid prediction, because most predictions are wrong, at least mine, I would say that legislation in the US, we're most likely to see stablecoin related crypto legislation before anything else here in the US. I don't know about necessarily other countries, but when we look at WeOwn, it's a fascinating story. There's a couple of really good articles that were actually there's a couple of New York Times that were more kind of high level overviews of how this was playing out. And then I think it was Elliptic put out a really good couple of blog entries on WeOwn, running what is, until somebody finds a bigger one out there anyway, probably the largest Telegram money laundering and scam marketplace in the world, with billions and billions of dollars worth of money changing hands. And WeOwn Guarantee was the name of that Telegram marketplace, but the WeOwn group was like a money launderer's dream operation, right? It was a full service operation. So you could go to this Telegram group, you could find services, you could find stolen data, you could find a lot of money mule related activity if you needed money mules. And it's a Chinese language Telegram forum, and it really is catering to like the pig butchering industry. And the pig butchering industry is a massive global scam industry. And at least when you look at the way the crypto, another area, another key theme I would point out, in addition to stablecoins, and they play into each other, the way the crypto industry is evolving is away from darknet markets and drug sales. That was like what it was all about, in the beginning. Now it's really the illicit activity is a lot of it is focused on scamming, particularly like pig butchering, right? And that's where this WeOwn Guarantee group comes into the fore. They are a marketplace to facilitate money laundering related to pig butchering, primarily, as well as other scams. But then behind that is a bank. It was until I think like last week a licensed bank. WeOwn International Pay in Cambodia. And after a bunch of reporting on it, actually lost its license. So a bit of a good story there. Although now they say they're going to reincorporate or apply for licenses in Canada and Japan. So if we have any Japanese or Canadian regulators on the line, be on the lookout for these sleazebags. So there was a bank to kind of facilitate the money laundering on the back end. They actually started their own on WeOwn Guarantee. This WeOwn group actually started their own stable coin to cater to the financial criminals who were getting their, USDT accounts locked out, or their other, accounts on different exchanges locked out. So it was really a full service operation. And it really points to the maturity of the scamming ecosystem and the professionalization of the people using crypto for illicit purposes. Like, we have moved on from Joe Schmo, drug trafficker selling stuff on some Hydra darknet market, right? That still is out there. I'm not saying it doesn't exist anymore, but I'm saying the way that this has evolved is like incredibly professionalized, very much like diversified in like the way we've seen the professional money launderer ecosystem evolve in fiat. The same thing is now being applied in the crypto space. There are highly skilled professionals in this space supporting particularly the illicit fraud ecosystem. So that's what I would say about that one.
And Sorry, Clayton. I'd like to also touch on exactly what you talked about. That's a really good point, Brian. It's also, I worry about the market of the stablecoin. I think stablecoin is really where the market is going right now. There's more companies that are popping up, some startups that are really catering to stablecoins and how to support that infrastructure. Because that's honestly, I'm seeing that's the future or / present if you're in the cryptoverse right now. And the problem I see with having a stablecoin tied to this particular one is that these illicit ties could fragment the market. Reputable projects are probably going to distance themselves from any association, and it might reduce consumer trust in stablecoins itself. And I think that's another big risk that you have to think about.
It's really fascinating. One of the things that jumped out at me as I was looking through some of these articles was the concept of crime as a service, right? As opposed to software as a service, as SaaS marketing, but like what Brian was just referring to, that there are these very specialized, professionalized individuals offering specific criminal services as a service to other people through these marketplaces. And that, to me, that's a new concept, very, very fascinating, very troubling. We've got some great questions from in the chat already that I want to make sure that we get to. So real quick, and then I know we had the Robinhood article that we can just briefly touch on, but Raj, who I think is tuning in from Atlanta, asked, what are some of the key challenges investigators are unable to solve despite using blockchain analytics solutions?
I can talk to that one. It is definitely the mixers and the privacy coins. But although the technology is getting better, from what I hear from my contacts inside these blockchain analytics companies, they're working on trying to sort of not puncture it, but work on opening that Pandora's box, the mixing, the tumblers, and I'm not sure about the privacy coins, but that's a big stumbling block, as well as the lack of intelligence of what to actually be looking for. Because if you're an analyst in one of these companies, whether it be an FI or a cryptocurrency exchange, you're not going to know what to look for unless your transaction monitoring alerts has come to you, and you're going to follow it then. But if you don't have the intelligence to write the rules on the back end, then you don't know what you're looking for. And that's the lack of the finant or financial intelligence that you need. So those three things, my opinion.
Yeah, those are great points. I would throw two more out there. One is on the mixer side. I've heard people in the crypto exchange say this a few times. Crypto exchanges are the best mixers.
Yeah, you're right.
Sometimes they throw around, because when you go in there, it's not like crypto in, crypto out, like easily traceable. You're entering a liquidity pool, and the crypto's all getting mixed around in there. And so, it's, if you are custodying your crypto on an exchange, like you have an account on an exchange that's holding your crypto, it's going on a big old pool of crypto, and it's not the same coins going in and out. So from a following the money perspective, transactions that are actually going into and out of licensed, regulated, completely compliant exchanges in some ways can be actually really kind of hard to trace. Not impossible, but more difficult. And the other thing I would say is, this isn't exactly a blockchain analytic problem. It is a industry-wide, across all of financial services problem, but maybe particularly acute in the crypto space because of the way it's evolved and the fact that all the transactions take place online. One of the key challenges is still just bad KYC information. If you are trying to follow the money, you need to follow it to somebody somewhere. And if you go to a crypto exchange and their KYC information sucks, and it's a mule account opened with a synthetic identity or some fake picture that they bought off a darknet market, great, you got nothing. So those are two that I would highlight as key challenges there.
Good points.
Okay. Another question from Irina, and I hope I pronounced that correctly. What tools or resources do you recommend for compliance professionals who are working with cryptocurrencies?
Gosh, this one is a tough one, because this one takes money, and it's a budget inside your FI. In case you are in an FI, that you're going to have to go to hat in hand to say to your FI management, you need to have the blockchain analytics tools that are available out there. The companies, we can't really endorse a particular company over another. So I highly recommend Googling it, see what blockchain analytics companies are out there. We've mentioned a couple already, but I hate to say you should go here, you should go there, just because of the, we can't endorse one over the other, but we do have friends in all of them, sort of thing. I'd hate to do that. Hurt our one friend over another. Also, there's some free resources that you can look for as well. Blockchain.com. You can start looking at that thing that way and just start figuring out and seeing what you can see when you're doing things on a very fundamental level. And if you want to go further, then using that as a means to say, hey, our firm should have the following blockchain analytics capability inside. What else would you say, Brian?
Yeah, I would say it really depends on like kind of what level you're at. So it's hard for me to give any sort of intelligent answer without knowing, are you kind of new to this space? Are you within the crypto industry but looking to learn more? There's a lot of different angles you could go. If you are kind of brand new and trying to understand cryptocurrencies and what they are, it's more Bitcoin focused, but there's a site called 99 Bitcoins that has a ton of like beginner level resources, articles. They have actually a free course, all sorts of stuff. They'll probably try to sell you something on the back end, but the upfront stuff is free. So you are able to, go and check that out. 99 Bitcoins is one. Coinbase, not endorsing them at all in any type of way. We're not endorsing any exchanges, et cetera, on this call. But Coinbase actually does have a lot of good resources for learners if you are trying to get a handle on crypto. And again, it's free. It's available on their site. There's an entire section that's like tons of information on it. If you're looking for like news and updates, CoinDesk, Cointelegraph are probably the two that a lot of people utilize on a regular basis. The other one that I would throw out there is, of course, ACFCS. We have a ton of resources, and we actually have our upcoming crypto and Web3 compliance symposium in just a couple of weeks.
That's right. acfcs.org/upcoming-events. That's coming up on May 14th. So again, man, we're getting so many great questions from our viewers that I don't even know if we'll get to the prepared questions that we have, but that is great. Here's one that I think is actually pretty interesting. So this is just from, I can't see this user's name. I'm going to go ahead and show it here. I know the story's a little stale, but how do you see the pardoning of Silk Road founder, I can't remember what his name is, Aaron something?
Ross Ulbricht.
Okay, Russ Ulbricht, yeah. Affecting cryptocurrency related crimes, specifically financial crimes.
I like to take this one. So personally, I'm not sure if I have too much of an opinion on it. It's one of hesitation and going, huh? Why? And I say that because I worked some cases closely to the Ross Ulbricht case, not the one specifically when I was in a big FI, but I also read a really good book that I will endorse. What was it called? American Kingpin. About him from start to, it's such a good book. And you really get into the meat and potatoes of what he did and how he did it and how it was investigated and how they got him and how they took him down in San Francisco and all that stuff. And I personally, this is my own personal opinion, anyone who wants to set up a market, whether it's virtual or whether it's literally on the street of Market Street and 4th Street in San Francisco, and you set up a table and you put all these drugs on it, what's the difference? You'd get arrested that way. So I don't understand why he was pardoned. I'm not privy to it. I'm not supposed to. I'm only just here in an association. I'm not in administration. I don't necessarily think it's a great thing. I don't think it'll have any bearing on any cryptocurrency crimes. I don't. But I don't understand why he was pardoned. Obviously, there's things that I don't know.
Yeah. Just because Ross Ulbricht got pardoned doesn't mean you're not going to get arrested for laundering money in crypto and sentenced to a long jail sentence. So
yeah,
I don't think there's a lot of takeaway from it. I mean, the flip side of it and the advocates for Ulbricht. Yeah, if there's any on the call, drop your take in the comments. But was that, the case was tainted by some misbehavior by DEA agents or criminal activity by DEA agents, which is true. Robert Force and I forget the other guy.
About that.
Yeah,
Yeah.
they were like actually trying to steal in like the most ham-fisted way imaginable. They were trying to steal crypto involved in the case. There was
Completely
alleged
forgot about that.
prosecutorial issues. But I mean, at the end of the day, nobody thinks that Ross Ulbricht didn't set up Silk Road and sell a bunch of fentanyl and all sorts of stuff. So, there's two sides of the story, and there were things that maybe you could have done with the case, obviously differently. But, it is a strange thing to see this go down as a financial crime professional. That said, it doesn't change anything for a legal or regulatory perspective. You can't do what he did and expect to get away with it, and you probably won't.
Good point. Thank you.
Very good point. All right, here's another one since we mentioned pig butchering. In pig butchering, basically wire transactions pass through correspondence banks or payment processor gateways. So what challenges or regulations or technologies do we need to upgrade? I think that's the question, or what do we need to do to help address that?
And that's such a great question. At the same time, that's the dichotomy of the pig butchering scam. That's a scam. It's not fraud. It's not account takeover. It's not some kind of rules that you can put on the back end to say if this, then, and to block a transaction. If a customer is going to hit the button, and if a customer is going to field a call from their FI to say, no, I'm doing it this way. I'm going to send a wire to my fiance in Cambodia and things like that. If they are hell bent, there's a lot of them that have convinced themselves, and my heart bleeds so bad for them, that they've convinced themselves that this is the right thing to do. There's not a lot of controls or things in the back end that a FI can do. Please throw in the chat if you think that there are things that they can do. But I personally feel like I'm at a loss, especially when it comes to scams. If people are convincing themselves they're going to hit this button and send their money, more education obviously is needed for our customers, consumers out there. We need to be able to protect them a bit more. And the question is, how do we do that?
Yeah, I mean, I think it really depends in some ways on how the pig butchering scheme is playing out too, of like what you could do to look for it or prevent it. Yeah, if it's a hey, you're wiring money to this weird person overseas, there are monitoring rules you should probably have in place already to pick that up pretty quickly and do something about it, right? So in terms of upgrades, I don't know. I mean, it might just be applying the rules that are already in place, but repositioning them to catch some of these fraud schemes if they're there for other reasons like money laundering or just general suspicious activity. And then you can layer on top of that, things like customer training, awareness, even like requests for information that can get at hey, what is actually happening here? Obviously, you're not going to tell them, hey, it's a transaction monitoring alert, but hey, we need more information from a customer service perspective for this transaction. And then the responses can give you a little bit more insight into, whether you think this is a potential pig butchering scheme. But the other thing, the other way a lot of pig butchering schemes play out is wire transfers to exchanges in order to purchase crypto, or funds transfers to exchanges in order to purchase crypto. And that's where it can be very difficult from an FI perspective to understand what the purpose of those are, because it's not like this, you're not going to have a memo line or something, particularly if you're the intermediary, which I think the question was related to like intermediaries in a transaction too. You're not going to have a whole lot of information or visibility in that, Swift messaging or whatever as to what this is for. You're just going to see originator and beneficiary. Beneficiary might have some super generic name, because a lot of exchanges just have these like super generic names, like, FTX was West, or it was FTX Westshire Realms Limited. That doesn't sound like a crypto exchange. It sounds like a restaurant for hobbits or something, right? So like you're never going to know if you don't have like an AKA list or a doing business as list of crypto exchanges built into your transaction monitoring system that you could potentially look for. So there are certain things you can do, but really I think it's just applying some of the standard monitoring techniques, RFI process, customer outreach process, and then building as much as you can. But as an intermediary, as a wire transfer, that's tough. I get it.
But by the way, I just want to say there is a Hobbit house in the Manila, the Philippines, that I've been to. It's fantastic. I am constantly go to the Hobbit house in Manila. I hope it's still there. It's been years since I've been there, but it's fantastic.
There is a really good comment just on this note that somebody says geo awareness such as Google Maps may help. And that's a good one too. Like there are cases where, the funds are being transferred to like geographic high risk areas to, exchanges or banks or whatever in areas that are like known pig butchering locations. So like, I'm probably saying it wrong, but if you have a funds transfer to like a financial institution in or around like Sihanoukville, Cambodia, where a lot of these scam compounds are, that's going to be problematic. The entire Golden Triangle region of like Laos, Myanmar, Thailand is really high risk for this type of activity. So yeah, geographic risk and understanding some of the geo risk related to pig butchering, are good. Go ahead.
Just to say, and Kathy's point that I see here too, at the end of the day, it is the customer's money. We can advise and recommend closure of the account. And that's where I was coming from too. So it's what you said. And I think what I said too, together is like, what do we do? There's all these things we can do. But at the end of the day, when they're called because something has come up, because of the geo fencing, because of the known, hey, this is a high risk area, and they actually make a call or talk to the customer and they're still saying, no, I want to do this. That's a tough one. They can still, we can recommend closure of the account, but that's about it.
Yeah. I mean, education, customer awareness, really important. That's one big area that it's not a silver bullet. It's really kind of a slow grinding process, but the more you can get out there, the better. The other thing, if there are folks who are not in the FI space out there that I like to bang the drum out, is like the way we could actually address this is not through like better transaction monitoring. It's through bringing in the telecoms, the social media sites, and the entire infrastructure that facilitates scamming into the solution, right? That's what Australia did in their scam framework. Australia has seen a 40% reduction of scamming at a time where everybody else is still on the increase. It's not going to work if it's in a financial institution problem. It has to be a broader industry and social response.
Have you seen Erin West's recent videos where she's been showing these scam compounds that are closing down? Now, for me, having been a counterterrorism officer overseas, that just tells me they're going someplace else, and now we've lost transparency. What does that mean, lost transparency? I don't know what that means. That could mean anything. Is that a good thing or a bad thing? Because they haven't closed down completely, and it leads to a lot of questions. So it's fantastic that they're on the run, though. That's really good. So we'll see what happens next.
Yeah, I mean, it's all about increasing the cost of doing business, right? So if you get your expensive scam compound disrupted, if you get your electricity cut, your internet cut, you're not done. You have literally billions of dollars behind you, but everything's just a little bit more expensive now, So like, keep it up. Keep turning the screws on these guys, It's good to see.
Another thing that, since we're not going to get to most of our prepared questions because we've got so many great comments from everybody who's tuning in today, but I thought this one was also a good comment that speaks to the overall conversation about crypto and exchanges. Most exchanges require search warrants to report or block crypto transactions, making the process difficult and time consuming. And I wish more crypto exchanges had a more efficient fraud reporting system, time-bound reporting system. What's you guys' response to that? Because that obviously seems like, that time is going to be of the essence when in any kind of crime that you're trying to track down. So thoughts on that?
So I will say that the experience that I've had inside crypto exchanges, whenever a warrant or anything, 314A, 314B came in, it's always been answered a lot more timely than a large FI, that's for sure. A lot more timely. Now, is that changing now in the last couple of years? Probably, because they're growing and there's more transactions. There's the need to hire more people. It'll be interesting to hear more from, it just says LinkedIn user on my end. So it'll be interesting to hear about the exact experience of this particular user with this question, because from what I've seen, it's always quicker. But then again, my perspective is compared to a large FI, which takes weeks or months sort of thing. And so I would want to know a little bit more on that one. What do you think?
Yeah, I think, there's really good exchanges out there that are doing it right. And I've heard a similar thing from a lot of the folks who have jumped from like the traditional FI space to the crypto space. So like, wow, we are way more responsive as this crypto exchange than I was at big bank XYZ, right? So there's still some out there that are either highly under-resourced or just not as responsive. So there's definitely room for improvement. I mean, SAR reporting is not going to lead to like account closure, right? But if you're filing SARs on an account, you don't need a search warrant to do that. So from a reporting perspective, I see that the question is most exchanges require search warrants to report crypto transactions. Shouldn't need a search warrant to be reporting it. You should be reporting, suspicious activity. I don't know where you're located in, so it depends on your jurisdiction, right? So take this with a grain of salt. But if you are a regulated exchange in a jurisdiction that regulates most do as MSBs or money transmitters, whatever, SAR reporting, UAR reporting, STR reporting, whatever it's called in your location, is a mandate, and that is a way to get intel to law enforcement. And most jurisdictions also have like a safe harbor provision in that SAR reporting process where they can then contact you and get more information about the contents of the SAR, including the supporting documentation that you list out as available in the SAR, right? So that is a way to get intel very quickly into the hands of people who can follow up on it.
All right, guys, we are even a little bit over time already. This has been an incredible conversation. Before we sign off and share some other thoughts about upcoming events and things like that. So, guys, if y'all need to get going, everybody else can, of course, check out this video will live on in perpetuity on our LinkedIn and YouTube accounts. But Aaron, Brian, what should our audience, what should our members, what should financial crime professionals take away from this conversation, and what should they keep front of mind when dealing with crypto, whether it's exchanges, whether it's transactions, or trying to decipher, if there's been some kind of illicit activity going on? What should folks really be thinking about and keeping front of mind as it pertains to cryptocurrencies today?
I can go ahead and start the first one. Honestly, risk-based approach is the same at crypto exchanges as it is in your traditional FI. And no matter what the kind of currency you're dealing with, whether it be peer-to-peer, fast, pseudo-anonymous, there's going to be risk involved. So having the same controls that you have inside a traditional FI, TradFi, into a cryptocurrency is going to be your best bet, and to have education for not only your employees to know what they're looking at, but also your customers.
Yeah, that's a fantastic points. I mean, I'm guessing a lot of our audience is in like the traditional finance space. I would say that from a traditional FI perspective, there's like a lot of new and evolving opportunity here. We talked a little bit about the OCC letter, but there's a lot of opportunity, not just in like crypto custody, but to introduce, to partner for like stable coin reserves. And so, this is a space that's really interesting and maturing in different directions than it has in the past, right? It's not really just about like hold crypto assets as an alternate asset class or something like that, which is like a lot of what it was, at least in the US and Europe. Other countries, hedge against inflation, or, as a way to make remittance payments, that type of thing. Different directions. It's more integrated into the financial system. There's more opportunity, and there's still enormous challenges in terms of criminality to be solved here. So a lot of very interesting work that needs to be done for compliance folks, whether you're in traditional FI space or whether you're either interested in or currently in the crypto space.
Awesome. Wonderful discussion, guys. Before we completely close out, a couple of things we want to remind our viewers of. First of all, our next FinCrime Friday chat is going to be the last Friday of April. That's April 25th. We have not settled on a topic yet. We would love to hear from you in the comments what you would like to hear about for our next discussion. This has been such an incredible discussion, and hearing from all of you is just incredible. Let us know if there's a particular topic you want us to cover, because we have not settled that topic yet, and we will review all of the comments on this video. And if there are some great ideas in there, which I'm sure there will be, that might be the next topic of our April 25th, save the date, April 25th, for our next FinCrime Friday chat. A couple of other things that we have coming up. We have our Web3 and Crypto and Compliance Symposium. That is happening on May 14th And in August, we have FinCrime Virtual Week. That's going to be August 11th through the 15th. All of these can be found on acfcs.org/events or upcoming events. Check that out. There's the link right there. Also, Brian, can you mention the accelerator program and what people can think about for that?
Yeah, I sure can. And I am remiss if I didn't shout out any of our CFCS certified folks who joined us. Thank you so much for being a part of the community. The certified financial crime specialist credential is really the only one out there that covers the full spectrum of financial crime risk. And the accelerator program is a fantastic structured approach to becoming CFCS certified. If you are looking to pursue certification, we have our standard self-study option, which is a really good way to do it. But if you want more structure, more guidance, 9-week virtual classroom with instructors leading it, a study plan that really tells you exactly what you should be doing each week of the pathway. And if you want to be ready for the CFCS in 6 months or less, really at the end of the program, which runs about 3 months, you'll be ready for it. But then you have an additional 3 months to schedule and take your exam. The accelerator is right for you. So I would encourage you to learn more about CFCS in general, as well as the accelerator program. And again, big thanks to all our CFCS folks who are out there tuning in.
All right. Thank you guys. Aaron, Brian, thank you both so much. Thank all of our viewers. Thank you. And Kathy, another great suggestion there. Please, April 25th, make sure you guys come back and check out the next edition of our FinCrime Friday chats. Keep doing the great work that you're doing. Stay vigilant. We appreciate you. We'll see you next time.
Thanks, everybody.
Thanks, everybody. Bye for now.